Right now, investors are pouring billions into South Korea and Taiwan, desperate for a piece of the AI chip boom. But what if I told you they are completely ignoring the only country in the world that controls an entire AI ecosystem from beginning to end? And the best part, it's currently trading for half of a price it was just a few years ago. Welcome back to Ladder of Finance. I'm Mohammed. We usually talk about building wealth by spotting the massive technological shifts before the mainstream catches on. Today, we are looking at the East. China's market has taken a beating lately, but beneath the surface, a massive state sponsored tech revolution is brewing. By the end of this video, you are going to discover exactly how to capitalize on China's hidden AI and infrastructure megatrends without touching the overcrowded, struggling internet giants like Alibaba. Let's look at the scoreboard. South Korea and Taiwan are having a massive moment thanks to AI chips. Meanwhile, China has been pushed down to the number 3 spot in emerging market indexes. The opacity makes sense on the surface. Retail sales are down. Bank loan growth is at its lowest point since 2001, and the US and China are throwing trade restrictions and tariffs at each other like it's an Olympic sport. But here is where the smart money pivots. Beijing is pouring everything into a bid for absolute self-reliance. While everyone else was distracted, China quietly built a 2 trillion global trade surplus. They aren't just making cheap goods anymore. They are becoming an advanced manufacturing powerhouse. We are talking large scale industrial batteries, robotics, large language models, and GPU designs. Think of it like this: into a global gold rush, you don't necessarily buy the gold. You invest in the company making the pickaxes. And Beijing is currently financing the biggest pickaxes factory in the history. They are pouring a projected $295 billion into data centers alone. They call it the Six Networks Initiative, upgrading water, power grids, communications, and logistics. Before we get into the exact companies and funds capitalizing on this, let me ask you, are you currently holding any international or emerging market ETFs in your portfolio? Let me know down in the comments. And if you are finding value in this breakdown, hit that subscribe button to keep climbing the ladder of finance with us. Okay, so how do we actually invest in this? Your first instinct may be Alibaba, Baidu, or Tencent, but those giants are facing fierce domestic price war and weak customer spending. We need to look at the hardware and infrastructure players. Take BYD, for example. You probably know them as the global best-selling EV brand. The stock is down heavily because of domestic price wars. But what most investors are completely missing is their industrial scale battery systems. That battery segment is perfectly positioned to power the massive energy needs of the AI build-out. Analysis think it's about 5% of their business now, but it could easily become a third of their total revenue. At certain times, estimated profits, it's a massive bragging. Then you have companies like Montage Technology. They design chips and sell to giants like Samsung. Some analysts believe Montage could eventually reveal the $1.9 trillion US Titans Broadcom. Or look at media. People think of them for home appliances, but a quarter of their sales now come from robotics and data center cooling. It's a highly profitable company quietly riding the industrial boom. Investing directly in companies listed on mainland China is notoriously difficult for international investors. This is where ETFs and mutual funds become your best friend. Funds like the X-Trackers Harvest CSI hold massive allocations in tech and industrials, capturing the exact AI infrastructure then we just talked about. Active funds from veteran managers like Tiffany Shaw at Matthews or Ben Durant at Bailey Gifford give you managed exposure to these exact growth engines without having to navigate the foreign exchanges yourself. Now, a quick word of caution. You cannot ignore geopolitics here. The US has blacklisted dozens of Chinese companies, and Beijing has retaliated. Regulatory measures are always a risk, but recently researchers visiting China noted that market regulators seems more relaxed than they have been in years. The focus right now is entirely on domesticate financial stability and technological dominance. The masses are currently chasing the peak of the Korean and Taiwanese markets. But true wealth is cultivated by finding high value assets trading at a discount right before the cycle turns. If you want to dive deeper into how to structure this kind of place in your own portfolio, make sure you check out the link in the description to join our community. Hit the like button if this give you a new perspective today. Subscribe to Ladra Finance and I will see you in the next video. Thank you.